Good morning, everyone, to Market Insights. This is Landmark Title's monthly market stats webinar, where we bring you the facts, figures, and what's going on in the real estate market here in Arizona for you to utilize in your real estate business. We are joined today with, I just found out, Scott Kiburz, our treasurer of ARMLS. As we said, Scott's held a lot of hats. He's been on the executive team at ARMLS for many, many years. So he brings a wealth of knowledge when it comes to actually looking at these market stats and kind of pulling them apart and giving you an insider's look into what our real estate market here looks like. With that being said, Scott, we're going to go ahead and jump right in.
Let's begin, ladies and gentlemen. Let's start with some fast facts. So currently, as of the 1st, we had 4,085 active listings in all Maricopa County. We had single family at 33, 38, townhomes, 238, condos, 235, manufactured homes, 193. The big point there, ladies and gentlemen, is between August and October, we were slowly climbing out several hundred active listings per month, and we got as high as just under 6,000 active listings as we started into October 1st. What's happened in the last 60 days, ladies and gentlemen, is the number of new listings per month has dwindled down by about 2,400 fewer new listings per month. And our sale rate, which you'll see here in a minute, has continued aggressively. And it is what we refer to here at the Biltmore as we burned off our active listing inventory from just under 6,000 to barely over 4,000, 4,085 as of the 1st. We sold in Maricopa County only 8,100 homes. Our absorption rate last month was 134%. That surged up to 174. It's aggressive out there again, ladies and gentlemen. Coming soon has been running in the 600s. It's down to 547. Interest rates are still holding. As we talk to various interest rate lender specialists, we're sensing there is going to be some rate increase later this year. Some people say 2 times raised rates by the Fed, maybe 2 and or as many as 3 times in 2022. Ladies and gentlemen, a month ago, we were at 517 average sale price. What sold through ARMLS last month in the month of December surged again, $530,000 average sales price. So we're moving quickly, and that is the fast facts of Maricopa County. Sarah, let's keep moving forward. We'll do some more stats here. Okay, I like to look at these numbers, ladies and gentlemen, as to some people like graphs, some people need, numbers. And so here we go. Total actives in the first line, total actives in ARMLS, October 770, then November 7,600, December. And as we got to January, you see that's everything in the MLS. That's every county. Sometimes properties from Utah slip in there, or Mexico, White Mountains, they're all in there. That's the total actives in ARMLS, is that very top line. And you can see that we're 2,000 fewer listings in all of ARMLS combined. When you look at actives in Maricopa County only, it's gone from 5871 in October down to 4148 the 1st of January. Single families have dwindled down to 3416. The townhome condo under contract, our townhomes and condos are in the low 2s. And our total UCB it dwindled down to 2293. Coming soon, again, as I mentioned earlier, has been running in the low 6s, but it's down to 539. Pendings are down to 4915. Here's the other key thing you want to look at on this numeric chart, and that's total sold. In October, we had 9,800 through the end of December. So when you say January, that's essentially January 1st. For the month of December, we had 9,310 sold units in all the MLS and 7,600 in all of Maricopa County. So we had a big December in terms of closed units. And hopefully we'll reveal a couple more things here and a couple more graphs. But we still have 5, as many as 10 buyers for every home that's in Maricopa County. Those that wanted to sell, needed to sell, or could sell did sell. I don't want to be trivial there, but we had one of our agents doing a fix and flip, and he got the best margin he's ever received in the month of December. House went on the market, was on the market 8 days and closed. He got an absolute premium price and a premium profit. People are still hungry for homes in Maricopa County. Sarah? I included this slide just as a trivia data point. We're going to look at this in the next 12 to 24 months, but this is a 2020 report from John Burns about the top 50 master plan communities. I went to this site looking to see if they've already published the list for what would be deemed the 2021 year. It wasn't there. It's not out yet. But I stopped at number 3, Summerlin in Las Vegas, as the number 3 top master plan community in the nation. And if you know Vegas, that's in the northwest quadrant of the metro. And Summerlin, it's a great place to be in Vegas. Howard Hughes Corporation is the person who's been building that. Ladies and gentlemen, out on the west side in what's going to be called Douglas Ranch, just a reminder that our local Jerry Colangelo has partnered with Howard Hughes Corporation to create what will be Douglas Ranch. In the next 12, 24, 36 months, you're going to see that evolve, and you're going to know that 10, 15 years from now, we're going to talk about Douglas Ranch the way we talk about Summerlin in Las Vegas today. Sarah? Okay, so looking at this graph here, what I wanted to illustrate for everybody, supply and demand by different prices is what's important, and comparing 2021 versus 2020. And if you go to the year 2021 and you see December, I got another green arrow there, month of supply, we burned inventory all the way down to 0.57 of 1 month. That's all prices combined. And then if you look at that throughout, you're going to see the demand. So obviously the biggest demand has been in the 200 to 300 rate range, where we had just such a low percent of supply. And our biggest supply was $3 million, and that was 3.84 months. A year ago in 2020, 3 million and above was at 6.29 months of inventory. We thought that 6.29 a year ago was record low. We never anticipated it getting further down to 3.84 months at 3 million and above, ladies and gentlemen, 3 million and above. Ladies and gentlemen, we're used to seeing what we call, or we refer to as a load of luxury. If I have a home at $1 million, $2 million, $5 million, chances are you're going to be listing that home as early as September, for sure, October, November, because the winter visitor buying that type of home, second home, usually maybe a third, fourth, or fifth, that buyer is in town in the winter when it's not so darn hot in the summer. We have seen that number, 3 million above. We've seen 50, 60 months of inventory supply normally this time of year. It surges, it stacks. They load that box, that quadrant, and burn it off by May, June of the following year. Ladies and gentlemen, we haven't climbed out of it. In fact, we've gone from 6.29 down to 3.84 months supply of 3 million above. Everything, and I mean everything, is moving very quick. Sarah? Okay, so just a couple graphs here just to give some trends. What we like to do, ladies and gentlemen, is the purpose of these stats is to look at trends, what's happening. We want to be 1 day, 1 week, 1 month, 3, 6 months ahead of whatever's happening in the market. And that's the reason we go through the stats the way we do. We just want to give you as much notice as we can to whatever master trend is happening. And to get involved in that, what we're going to start with here is active listings. So you're going to look at this graph. It's essentially 2 years, starting January of 2020. When you see 11,194, that's mid-March. That's when the pandemic set in. We're just shy of 2 years. And we surged to 11,194 homes that were active in our MLS. And there immediately went to fear. 2 months later, we burned it off. There was a buying frenzy, and we burned 11,000 down to 694. 6794. Part of that is people pause, like, I don't want to put my house on the market until I know where I can go. And that bottomed out, that cratered just shy of a year ago, March of 2021. We were down to 3,021 homes in the MLS active in ARMLS, in the Arizona Regional MLS. There were a couple of days where we dipped below 2950. We did get into the 2000s a couple of days. And what's happened since March of 2021 is we've slowly climbed out, or what we thought was going to be a steady climb, but at least we were climbing all the way up until October. And then people pause, which is seasonal. We normally see, if I don't need to be disrupted during Thanksgiving and Christmas, or choose not to be, that I'm going to wait to list my house. And so that seasonal decline in October, November, December, it's not unreasonable, but it definitely burned off our inventory from 5,800 down to 4,106 as the time of this report earlier this week. So that's the number of active listings in the MLS. Now, what I want to point out to you is we normally see in January, and we'll see this here in a minute. Let's move forward, Sarah, and we'll illustrate what else is happening. So under contract, you can see here that we had a high burn rate. We slowed down. The slowest in the last 8 months has been the month of July at 96 under contract. Then we surged right back up to 10, 11,000. And even the slower month of November, December, we were still over 9,000 doors closing a month, or 9,000 homes under contract a month. Sarah, as we get into the closed, you're going to see here that we've been running between in the last 6 months, 8,142, and in the mid to high 7,000 doors a month that we're closing in ARMLS, not the whole United States. This is just in the area of Maricopa County, please. And we had a pretty significant number of closed doors, actually higher in December than we did November and October. Like, we were busy. People were working hard. The people out there buying were buying and being very purposeful. Sarah? Here's the graph I want to spend a little bonus time in, and this will help explain things. And this will be a setup for what we did for the balance of the market stats for this month. So we're looking at the number of new listings that have gone into the MLS by month, going all the way back to January of 2 years ago. So let's look in the middle of the graph, and it's a little bit cut off there. I apologize. But when you see we bottomed out December a year ago, 65.48, middle of the graph. That is where we bottomed out. And we bottomed out a second time in December 31st at the far right of the graph, 68.60. So those two lines, as you see them trend down there, that is just the pause. That is the pause and slowing of people not wanting to list and sell during the holiday. So it's natural for us to see a lower inventory at that point. Go hard far left to the graph and you see 93, 92, and you see that number is coming down. That is coming down from 2 years ago, January. And what that's showing is we normally see a surge happen in January. A year ago, we went to 8270, 8226 for January, February in terms of a number of new listings into the MLS. The year before, we were up around almost 10,000. And so we're trying to anticipate how many new listings are going to land in January of 2022. Is there still a lot of fear out there? Statistics tell us, ladies and gentlemen, that for every seller in the market, one of two of those people do not have a house they need to then turn around and buy. They can sell, move out of the territory, out of the metro, and or it's an investment property they're selling off. But 50% of the people that do list and sell their home turn around and become buyers. So when we see how we've bottomed out at 68.60, that's a low point, a low throw for the year that we normally see of people listing their home. But we're going to probably climb out between 8,000 and 10,000 new listings in January. So ladies and gentlemen, if you're a listing agent, this is the time. Boy, it is competitive out there. We're going to see a slight increase in price point and a bigger increase in home selling over asking because there's so little inventory out there to choose from. That graph there, we're going to look at that a month from now, and we're hopefully going to see 6860 swing and advance into at least 8,500 or approach 10,000 new listings for the month of January 2022. Sarah? Okay, so I wanted to illustrate what's happened in the market, and it's the bottom left graph that I want to focus on: month of supply versus absorption rate, the black and the green line. The black line, which is just trailing just under 100%. We've been used to that for 18 months, but in the last 6 to 8 months, our absorption rate has gone over 100%. The highest point peak on that black line is 270% absorption rate. We were selling everything in our inventory this month, next month, and part of the following month. And that was super painful for all agents. You had to be very strategic, have great relationships with all parties to get your deals closed at that market. And since that time, that was approximately October, we've calmed down all the way to 132% a month ago. And what I want to point out to you, ladies and gentlemen, that at the very far right of that black line is absorption rate. We surged again in the month of December from 134 up to 174, 175% absorption rate. And at the same time, the green line shows the months of supply. We've been very low for the last 8 months. We were slowly climbing out, and then we dipped down again. We burned all the way down to 4,100 active listings in Maricopa County. So those two lines right now are starting to separate. Boy, it would be great to just have them get closer a wee bit. It would just take a lot of pressure off all the agents in the marketplace. Sarah? Okay, what we're looking at here is supply and demand for the year of 2021. And what I wanted to illustrate is the closer to the far right, month of supply index, that row of numbers. January a year ago, we had 0.66 months of inventory. That's if we didn't put another listing in the MLS, we had 0.66, just over a 2-week inventory of homes. We dipped to the lowest point in March at 0.37. And then as you look between July, August, September, October, we were climbing out, and we got as high as 0.93. This graph on a strike point of the month was 0.84, but we got as high as 0.93 months of inventory, almost a 1-month inventory. Yippee skippy dance redefined. However, we burned that right back off November, December, and we're back down to 0.57. I'm optimistic we're going to level back off and get back into the 0.7, 0.8, 0.9 between now and say June, but it's going to be a hard battle all the way. Sarah? Okay, so what we've got here is we move into the last few minutes of today's message. Wanted to give you some quick history. So I want you to look hard at this particular graph. This is all of Maricopa County. But in the very top green arrow, this is December of 2019. This is essentially what we were looking at 2 years ago. 2 years ago, our listings were down 32%. But even at 32%, if you follow the white arrow over to active listings, on that day, January 1 of 2019, it'd be 2020, we had 9,789 listings. And in 18, we had 14,000. Oh my God, is that almost like a forgotten memory of how abundant that inventory was? When you look down in the yellow circle, it was an amazing, our market was up 8.1% for basically the year 2018. That is amazing, ladies and gentlemen. That's all Maricopa County combined. Just know the Case-Shiller report that's gone back 180 years and studied home price increases for the last 180 years, adjusted for inflation. The average homes have gone up 2% per year, going back an average of going back 180 years. To have an 8% return, we were just mesmerized by that number. Holy cow, celebrate. Next slide, Sarah. Then we get into 2020, and homes are down 49%. We're all the way down to 4812, which is about where we are now, but home prices went up 17% for all of Maricopa County. Sarah? And then currently, home prices or active listings are down 14%, 41.39, not too far off from where we were a year ago. But home prices went from 8 to 17 to 29 in the yellow, 29.3% appreciation across all of Maricopa County aggregated together. That's a staggering number. Who had the magic crystal ball to see that? It's been amazing. Now, ladies and gentlemen, just personal commentary, what I've struggled with and been deep search of is top economic leaders across the nation to make any kind of prediction about what's going to happen in 2022 in terms of home price appreciation. And I've seen it as low as 8%. I've seen it as high as 16%, but I don't have anybody making a candid prediction about what's happening to the United States real estate market in 2022. There's a lot of politics happening, government issues happening. Those are some of the biggest dynamics that will have an impact on our market. But ladies and gentlemen, we've gone from 8 to 17 to 29% appreciation, all in Maricopa County. It's a great time to be in the business of real estate. Great time to be a homeowner and a potential landlord. Sarah? Hope that was helpful, everybody. So now what we focus on this particular graph most times in blue, active listings 4139, under contract 7140. Know that that's down. That's down because the inventory is down and there is somewhat of a pause by agents, buyers, sellers in the month of December due to the holiday. What's important to show is solds for Maricopa County 7264, slide to the bottom left or middle left, new listings 5715. Ladies and gentlemen, the concern that is out there for that is sold listings 7264, new listings 5715. That gap, 1,000-1,400 homes, give or take. That's a big gap. We are burning inventory faster than we can put it on. And so what happens is if I am doing a fix and flip, that can sell quickly. And so if we go back just 120 days, all of Maricopa County combined was running an average of 9.8% fix and flip. Ladies and gentlemen, in the green pie graph there, 14.2% homes are being flipped. That is moving into a very positive business model that take whatever I have, make it new. I want all the new appliances, carpet. I don't want to do a thing when I move into my home. That market is alive and well. 14%. Next slide, please. So now I wanted to toss in, just for a baseline of knowledge, that this is the rental market in all of Maricopa County. Again, you can have your rentals in the MLS database. I don't know the exact number. I'm going to say somewhere between 15 and 28% of all rental potential properties are in ARMLS. There are so many other places where people can go to get rentals that this is only a portion of that. What I want to point out to you again, in yellow, the median price per square foot is up 16% for rentals. It's at $1.35. Depending on the area you're in, that can be just under $2 a square foot. Big driver there is that rental prices are definitely surging for sure. Sarah? We're going to go through Phoenix here, and then we're going to do something different as we get ready to close out. So again, we've looked at Maricopa County. Now we're looking at Phoenix. Phoenix active listings are down 15%. In yellow, all of Phoenix combined is up 29.6, just shy of 30% increase in Metro Phoenix last year. A lot of big indicators of why that's happening. Insights include chips being built, Amazon's growth, just a lot of people looking to be in Arizona for the workforce, cost of living, quality of life. We're definitely in a growth mode. Sarah? So when we look at Phoenix, what's happening here, it's fairly similar in terms of percentages that's happening in all Maricopa County. We have just 1,061 homes in Phoenix, Arizona. Phoenix, what is it, fifth biggest city, 1.8 million people. To think that there's only 1,000 homes in all of Phoenix for that population, amazing. Two more things in this graph that are noteworthy to point out. Sold listings 2010 and new listings 15-18. Again, that's just shy of 20% reduction from the previous month. We do know that that's part of the holiday season, but we've gone a long time where we have never seen new listings have such a lower percent than the sold listings in that same city. Now, while in the green slice of pie in the pie graph, we're at 14 and some change for fix and flips in all of Maricopa County, but we're at 16.66 in Phoenix. That is significant in our market. The fix and flip market, again, exclamation point, doing very well. Sarah? Rentals in Phoenix up 21%, and they're averaging $1.48 a square foot. And these are just trend lines for what's happening. We have a property management division in our office, and they're seeing if a tenant turns out and moves away from a property, we're seeing significant monthly increase in rent, $200, $300, $400 a month increase in rent on a new move-in client. Sarah? Okay, so what I'd like to do here, ladies and gentlemen, is explain. I know we're getting to the top of the hour with our time, but I wanted to illustrate the trend. So anybody on the call, anybody seeing this later, and they're specializing in one of the various communities, in this case, Apache Junction, Surprise, Tempe, Tolleson, Phoenix, Goodyear, whatever the city. What I've done here for the very first time is I've included the essentially the November statistic and then added the current statistic. What I wanted you to see is what's happening in your targeted area, targeted community. And the three things that really are important to pay attention to: has there been a change in active listings in blue? Is there a change in median sale price in yellow? And month of supply, has that dipped as well? So let's go deeper into Apache Junction. So back up one. So back up one for me. Go to the very first one in Apache Junction for me. Yes, here we go. Here we go. So we're 35% active, median sale price up 29, just shy of 30%. Month of supply down 23%, 0.84, not even a month of inventory in Apache Junction. We know there's a lot of houses being built there. As we move into December, now the next one, Sarah, we're at 22% active listings. We're not at 29.9, we're at 26.9, and we're at 0.79 months of supply. So we burned off 0.04 of 1% of supply. It is moving fast, ladies and gentlemen, and that's a great example of the trend. So now what this is going to repeat now, Sarah, next slide, for Avondale. Avondale listings are up 31%. That's because they were so darn low a year ago at 45. Now they're at 59, but their median sale price is up 35% in November and 0.58 of supply. What's happened more recently, Sarah? Next slide. December up 27%, still at 35% increase, and 0.44 months of supply compared to 0.28 a year ago. And what was happening a year ago at this time in Avondale, it was when Amazon announced that they were doing 11 new warehouses and a 1 million square foot warehouse in Avondale as a super warehouse. It's still been a very aggressive city. So ladies and gentlemen, as we get ready to end our time, I appreciate everybody being on. I appreciate everybody working hard out there, helping their clients buy and sell property. I'm privileged to be in business with Landmark. I'm really thrilled with the service they always provide our agents and clients. And as providing this information, we just want to be one day, 1 week, 1 month ahead of whatever you're experiencing. So as you slide through the rest of the cities, which is what Sarah's doing now, you're going to see this individual swings higher and lower in all the towns that make up the majority of Maricopa County and all of the Arizona Regional MLS combined. Sarah, thanks for winding us down here. Anything else that you'd like to share with today, please?
Scott, my mind is blown right now with 1,000 active properties
in Phoenix.
Yeah. I feel like I'm in here in North Phoenix and I'm like, there should be 1,000 properties just up here in North Phoenix, not for like the entire city. I mean,
we have 152, 53 zip codes that make up Maricopa County. That when you take the 4,000 rate number of listings active in our MLS, it's 18 to 22 listings per zip code, per the entire zip code. And we're gonna feel a gunshot go off, I think Tuesday of next week. Traditionally, we've said that for like the last 5 years. We watched it. When things take off, it's usually the second Tuesday in January, where we're done with the holidays, the tree's put away, any returns are done, kids are back in school, barring a pandemic. But there's a gunshot that goes off, and it's like a big marathon where everybody's just standing up at the line and waiting for the gun to go off. I'm hoping that when you and I talk in February, that we're seeing 8,000 new listings, 10,000 new listings for the month of January, and we get some relief in this marketplace. It's always a pleasure to do this for you and your clients, Sarah. If there's questions that people have, they can always get them to you, and I'll do my best to incorporate them in the future. Appreciate all you do. Get ready for a great vacation personally and a great year.
Thank you, Scott. Well, I can't wait till next month. I'm ready for this gunshot already. I know all of our agents are as well. So thank you, Scott, for this great information. My mind is blown every month when we do these. It's really just such good information. Everything we went over today is available to our agents as well. Reach out to your business development manager. We record this. We have the slide deck available as well. We also put together the specific city information into snapshots for you to share on social media or share with your clients. So please utilize this information, leverage this information, be the realtor in the know. And as always, thank you to our business development management team, Beth, Becky, Melinda, Mary, Patty, and Michael. Y'all are awesome. And thank you, of course, Scott. And thank you to Landmark Title. We have 7 offices here in the Valley, as well as our Prescott one. I'm realizing this is an older one that I have. It doesn't highlight them all, but we are all over Arizona to help you, especially when that gunshot hits off next month. So we'll see you back here next month, and let's find out. Let's get on this roller coaster, Scott.
Happy New Year, everybody. Thank you, Sarah.
Happy New Year.